Hello and welcome to another session of the My Solo 401k Financial My Community Daily Webinar Series. We're excited to discuss today Self-Employed Retirement Showdown, Solo 401k versus Fidelity SEP IRA. All right, let's get started. The presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So if you do have questions or topics you want to discuss, please chat over those questions or topics. Please like and subscribe if you're on whatever channel you're on, whether it's YouTube or LinkedIn or Twitter. And you get notifications of when we go live, and you can ask questions or hear what other people are asking. And if you're finding this to be helpful, if you do like on YouTube, that'd be super helpful to help get the word out to other entrepreneurs just like you. So we like to go live every day. If you, again, subscribe, or if you go to our website, mysolo401k.net/webinar, you can find the schedule. On Fridays, we do deeper dive content. So we'll be continuing our series of the magic number. In other words, how much income you need to be able to maximize contributions. Now, again, today we want to discuss the Fidelity SEP IRA versus a solo 401k. So let's first lay the foundation and talk about who's eligible to set up these types of accounts. So you need to be self-employed to be able to set up both a SEP IRA or a solo 401k. Now, specifically with the solo 401k, you need to have an owner-only business with no full-time W-2 employees. So think like an independent contractor, a solo practicing realtor or attorney or medical professional. You don't need to have a formal legal entity like an LLC or an S Corp. A lot of our individual clients, for example, operate as sole proprietors. The key is that you're reporting earned self-employment income with no full-time W-2 employees working for any business owned by you or a spouse, if any. Your spouse or business partner can participate as long as your spouse or business partner are reporting their own earned self-employment income. So earned self-employment income, for example, would be income reported on Schedule C if your business is taxed as a sole proprietorship, or W-2 wages if your business is taxed as an S Corp. You could set up a solo 401k even if you've got a W-2 day job, even if you participate in your W-2 employer-sponsored plan. Again, as long as you get that separate earned self-employment income. Now, if you go to Fidelity's website and you look at their page that talks about the SEP IRA, you can see that they have they break down the features, they break down contribution rules, etc. So what we've done is we've created this chart here, which helps compare the Fidelity SEP IRA versus getting a solo 401k from my solo 401k Financial. So right off the bat, you'll notice that the contribution options for a SEP IRA are much more limited than a solo 401k. So with the SEP IRA, you can only make the employer contribution, right? Whereas with a solo 401k, you can make both employee and employer. That's why a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. And then if you have a plan like ours that allows it, then you can also make Roth contributions or even mega backdoor Roth contributions. So the way that you make mega backdoor Roth contributions is by making what's called after-tax contributions. So you cannot make after-tax contributions to a SEP IRA. So that means that the mega backdoor Roth doesn't apply to a SEP IRA, whether it's at Fidelity or somewhere else. Also, employee deferrals. Again, you can only make employer contributions. So employee deferrals are out. Now, Secure Act 2.0 does now allow for Roth contributions to be made to a SEP IRA. So that would be a SEP IRA employer Roth contribution. But it's clear from Fidelity's website that their SEP IRA doesn't accommodate Roth contributions. So in that second row, you can both make employee contributions as well as employer contributions as Roth contributions to our solo 401k. Next row, the in-plan pre-tax to Roth rollover. So this is where you have cash or assets that's already in a retirement account and you want to convert it to a Roth status. So Fidelity SEP IRA is not going to allow you to do that because they don't allow for Roth. So whereas our plan does. So if you have, say, pre-tax money that's in your solo 401k, it could be money that you contributed to the pre-tax account, or it could be money that you rolled over to the pre-tax account, say from another retirement account. You can transfer it from the pre-tax account to the Roth account inside the solo 401k. So that would be taxable at the time of the transfer. It's going to be reportable, and we handle the 1099-hour reporting that's required as part of our service for no additional charge. But then going forward, you'd have that potential for tax-free growth. So for example, some individuals we're seeing because of the dip in the market, right? They might have assets in their pre-tax account where the value has now gone down, and they want to convert those in kind over to the Roth. So now they just pay tax on the lower value, but then going forward, the idea is that when the value goes back up, all that subsequent growth is going to be tax-free, potentially tax-free because it's inside their Roth account. So that's a feature of our solo 401k plan that would not be available if you got the Fidelity SEP IRA. So loans, you can't take a loan from any IRA, certainly not a SEP IRA, certainly not Fidelity's SEP IRA, whereas our plan does allow for 401k loans. So this is where you could borrow money from the solo 401k. You literally take it out of your solo 401k account. It's not going to be subject to taxes or penalties as long as it's properly documented as a loan, which we handle the loan documentation requirements as part of our service for no additional charge, and then pay back according to those loan terms. So that's going to be paid back in monthly or quarterly payments, equal payments of principal and interest, with those payments spread over a 5-year term. Alternative investments. So Fidelity's SEP IRA is going to be limited to Fidelity's investment offerings, right? Maybe some mutual funds, for example. Whereas our plan, you can invest in a wide range of brokerage type investments. You can have your account at Fidelity. Fidelity is the most popular option for our solo 401k customers in terms of brokerage accounts. In addition to that, our plan allows for true alternative investments. So that could be real estate or notes or cryptocurrency, precious metals, etc. We provide all the ongoing compliance support for no additional charge. So for example, the 5500 EZ that would need to be filed once the value of the plan exceeds $250,000, 1099R, like let's go back to the pre-tax to Roth transfer. That's reportable on a 1099R. We handle that as part of our service for no additional charge. Now, Fidelity's SEP IRA, they don't charge anything to set it up. Our plan, of course, we do charge a fee. We charge $650 as our initial fee, which includes the $525 establishment fee plus the first $125 annual fee. And then starting 12 months later, so for example, this time next year, we charge our $125 annual fee that would cover the second year. But setting up our plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years, which more than covers our fees for the first 7 years. In other words, if you added up all of our fees for the first 7 years, it wouldn't amount to $1,500. So that's a true tax credit, a true dollar for dollar reduction in the individual's tax liability. And then, as I mentioned, with our plan, we're totally neutral as far as where the accounts are opened up at. We're very hands-on in helping customers open up accounts at the bank or brokerage of choice. Fidelity is the top brokerage option, so you can still have your accounts at Fidelity, but you could also have a bank account or an account at a crypto exchange or another brokerage. All right, so that's a good chart, I believe, in painting the picture. As mentioned, it is possible generally to have a SEP IRA where you can contribute Roth contributions. Fidelity specifically doesn't allow that. Now, one of the benefits of a solo 401k over a SEP IRA is that, number one, you can make additional contribution types, right? Like in addition to just the employer contribution that you can only make to the SEP IRA, you can also make employee, you can also make after tax, you can make Roth. And so that means that you don't need as much earned income in order to maximize your contributions, right? So for example, the contribution limit for a SEP IRA is the employer limit. It's 25% of your self-employment income if your business is taxed as an S corp. It's 20% of your self-employment income if your business is taxed as a sole proprietorship. So you're going to need many times the amount of contribution that you want to make in self-employment income to justify that SEP IRA contribution. Whereas with a solo 401k, because the employee limit is 100% of your self-employment compensation, the after-tax limit is 100% of your self-employment compensation. For example, for 2025, if you're under age 50, you could contribute 100% of your self-employment compensation as a Roth and a mega backdoor Roth contribution up to $70,000 to the solo 401k. So you'd only need $70,000 as self-employment income to be able to put a full $70,000 between Roth and mega backdoor Roth contribution. So here, example, Jane is self-employed under an S corp. For 2025, she pays herself $70,000 in W-2 wages. Jane can choose to contribute the full $70,000 of her W-2 wages as voluntary after-tax contributions to the solo 401k, then subsequently convert those to the Roth solo 401k. If instead Jane made the contribution to her SEP IRA, though, she'd be limited to 25% of her wages. So she'd only be able to contribute $17,500. And if it's that SEP IRA at Fidelity, it would have to be made as a pre-tax contribution. So same deal. Now let's assume her wages are $100,000. She's only going to be able to contribute $25,000. Again, it's 25% of her wages to the SEP IRA, where she'd be able to contribute all the way up to the overall limit with our solo 401k. Now let's take one of the questions and then we'll come back to discussion of the deadline. So is there a limit besides the maximum contribution to a solo 401k if I want to contribute all my self-employment income, say $70,000 to an after-tax account, then move it to either a solo 401k or Roth IRA, solo 401k Roth or Roth IRA? Can I do the same with a catch-up contribution? So you have to have the self-employment income to justify the contribution. You have this principle that you can't save more than you earn, but the voluntary after-tax contribution limit is 100% of that self-employment compensation up to the overall limit, which can then be transferred either to a Roth solo 401k or Roth IRA. Now, the catch-up contribution that applies once one is age 50 or older, or age 60 to 63 for 2025, now that you have the super catch-up contribution rules, those catch-up contributions or super catch-up contributions, they are not made as after-tax contributions. They have to be made as employee contributions, as salary deferrals. That means they're either made directly to the Roth solo 401k or to the pre-tax solo 401k. So if you wanted to transfer those out of the plan to, say, a Roth IRA, those catch-up contributions, you'd have to meet a triggering event. So there's no triggering event that applies to after-tax contributions. Individuals that have a plan like ours that allows for in-service distributions of voluntary after-tax contributions, they can transfer those after-tax contributions out of the plan to the Roth IRA, but you still have to contend with the statutory rules, which prevent other types of contributions from being transferred out of the plan, like an employee contribution, such as a catch-up contribution, until you've met a triggering event, which, for example, a common triggering event would be being age 59 and a half or older. So in short, catch-up contribution has to go to either the pre-tax or the Roth bucket as an employee contribution. Great question. Thank you so much for bringing it. We'd love to discuss these topics, so thank you so much. The first year we sign up for the solo 401k, what paperwork will we be responsible for coming next tax season? Do we need to start learning about certain paperwork? So we handle all the ongoing compliance support as an optional free service for our customers. In other words, no additional charge. Now, what's needed will depend on what's transpiring. So when there's mandatory plan updates and amendments, we handle those automatically, proactively. But other things will depend on what's going on with the plan. For example, if the value of the plan goes above $250,000, then a 5500 EZ will need to be filed for the solo 401k. Now, we do that as an optional free service. We do it as under the electronic filing system to make it easy for our customers. Customers just have to let us know, though, because we don't have access to the account. They just let us know, we add them to the list, and we prepare it in the eFast filing system. We assign it to them so they can just log in, submit it. Then then they sign it, then we submit it, and then we send them a courtesy copy. Other scenarios that would require some type of compliance support would be if you're doing a distribution. So you're moving money out of the plan. Could be a taxable or it could be a rollover out to another account. like an after-tax transfer to a Roth IRA. That's going to require a 1099-R, or a conversion, like a pre-tax to Roth conversion. That's going to require a 1099-R, or an after-tax to Roth conversion. That's going to require a 1099-R. So we have an online forum that customers use 24/7 to give us this information so we can add their plan to the queue to prepare the 1099-R. If you go to mysolo401k.net/forums, you can easily access the applicable forms that customers use to give us the information we need to prepare the 1099-R. And then I would say the last scenario that I would flag is if someone is taking a 401k participant loan. So in advance of doing that, we will prepare the loan documents. We do it within 1 business day. So if someone wants to take a loan, they just fill out our online questionnaire that prompts us to prepare the loan documents. Great questions. And if you're finding this to be helpful, if you please like on YouTube, that will really be great to help participate in getting the word out to other entrepreneurs just like you, to get this information out to them. As you know, there's a growing number of self-employed individuals. And so we appreciate your participation in helping to get this information out to them. Just if you like, that helps to get the word out to them. Like the video. All right. So if I open a solo 401k now, can I contribute self-employment income for 2024? Well, that's an awesome question. Let's take a look at the deadline. So it depends on how the business is taxed. So it depends on when the plan was set up. So for those that signed up with us, or that maybe set up a basic plan somewhere else and now they're trying to upgrade to our plan before the end of last year, if you signed up with us or somewhere else before the end of last year, you would preserve the ability to make all types of contributions for 2024, whether employee, employer, or voluntary after tax, anytime up until your business tax return deadline, including any timely filed extension. So for a sole proprietorship, it's going to be April 15th or October 15th. If your business is taxed as an S Corp, you would have had to file a timely extension because the S Corp deadline was March 17th. But if you filed a timely extension, now that would give you till September 15th. And if you had set up a plan with us before the end of last year, or somewhere else that you're now upgrading, you would preserve the ability to make any type of contribution until your business tax return deadline, including any timely filed extension. But to your point, if you hadn't set up a plan, either with us or somewhere else before the end of last year, there still is time potentially to make 2024 contributions. Now, if your business is taxed as a sole proprietorship, you can still set up a plan here in 2025 and make all types of contributions, whether employee, employer, or voluntary after tax. Now, you're going to have to make that employee contribution for 2024 by April 15th. But if you file a timely extension for your 1040, that'll give you until October 15th to at least make the employer and or the voluntary after tax, in other words, the mega backdoor Roth contribution for 2024 by that extended deadline. Now, for all other types of businesses, could be a partnership or an S Corp or a C Corp. If you didn't set up a plan with us or somewhere else that now you're upgrading to our plan before the end of last year, and then in that case, it's too late. If your business is not taxed as a sole proprietorship, it's too late to make employee contributions for 2024, but there still may be time to make employer or voluntary after tax. So for those other business types, they can still set up a plan here in 2025 and make employer and voluntary after tax contributions for 2024, as long as they set up the plan in time to make those contributions by their business tax return deadline, including any timely filed extension. So if your business is taxed as an S Corp, you filed an extension for your 1120S, that will give you until September 15th to file that 1120S. That'll also give you until September 15th to open up a plan and make employer and or voluntary after-tax contributions for 2024 by that September 15th deadline. Great question. Since we have the checkbook, how do you track all the various things that we are investing in and make sure they are reported properly? Well, customers have to let us know, but only if it applies. So just merely investing your money, your solo 401k funds, is not reportable at the plan level. It's only reportable once the value of the plan exceeds $250,000. But even that 5500 EZ short, which is a very short form, it doesn't report specific investments. You just report the value at the beginning of the year, the value at the end of the year. You report any contributions to the plan, any rollovers to the plan, and whether you've got an outstanding loan. So we have an online questionnaire for those that let us know that they want us to help prepare the 5500 EZ that we use to capture the information that's needed to prepare that 5500 EZ. All right, well, wonderful. That takes us to the end, it looks like, of our questions. Again, if you're finding this helpful, please like on YouTube. Helps us get the word out to other solopreneurs like you. Please continue to engage on our webinars. You can follow us on our community as well, mysolo401k.net/my community. We got over 30,000 members. We got a vibrant community where people are posting in the forums or come and watch webinars, etc. I see we got a question coming in. We'll give it a moment here. Thank you so much for starting the process with us. I see your email address. I see. So we sent you an email that we need you to submit the online application. I could see an email that came from Mark Nolan a few hours back. I'm going to forward it to your email address. Or if you just go to the website and click on open account and then solo 401k, it's a quick 1-minute application. Once we get that information from you, then we'll get your plan in the queue. Thank you so much for following up, and thank you so much for signing up. Thanks for bringing the question to the webinar. Yes, we can help track this down. Hopefully you've got it in your email box. But like I said, you could also just go right to the website, mysolo401k.net. Click on open account and then solo 401k. That'll take you right to the application page. Yes, I'm hanging on. Thank you so much. Yes, we did receive the payment, but we haven't received the information that we need. So to be clear, if I open a 401k now as a sole proprietor, then I can make employee contributions for funds earned in 2024 and get the corresponding tax benefit on my 2024 taxes, as long as I make that contribution by 4/15. Obviously, the time is getting tight, but yes, it can be done. So you could open up, for example, a brokerage account at Fidelity, or you could open up just a bank account just to get that contribution in there. And then you could always later on set up an account somewhere else and transfer the money over from the bank account. Hopefully you see the email, Andrea. No? Okay. Maybe it's going to your spam. Yes, I'll send it to you now. Well, if it's a pre-tax employee and a pre-tax employer, it's going to be deposited into the same pre-tax account. And so if the business is taxed as a sole proprietorship, it's going to be reported the same. So it would really just be an internal record. It gets reported the same on the 1040 as a pre-tax contribution, the same line. It goes into the same account. Now, if the business is taxed as an S corp, for example, the employee contributions are reported. The pre-tax employee contributions are reported on the W-2, whereas the employer contributions are going to be reported on the employer's tax return. So we'll prepare the documents within the same day, the same business day when someone signs up. An email goes out with a link to our secure portal where you can access the documents. You download, you sign, you upload, and then from that same email, you're going to be able to upload as well as go to a page on our website where you tell us where you want to have the accounts at. So if you do that same day, then by the next business day, we'll be able to get the EIN number from the IRS, and then we'll either prepare the paperwork to open up accounts at the bank or brokerage of choice, or guide you to prepare to open up the accounts. For example, Fidelity has an online process. So the process to open up the accounts, right? Because we don't hold or have access to our customers' money, but customers will open up accounts at different banks, different brokerages. So that specific process is going to vary, but typically the brokerages will open up the accounts in a few days. Fidelity is the fastest now because they have an online process, and then you can wire money to that Fidelity account. So it could happen in just a few days. Oh, thank you so much for signing up. We appreciate it. And then you don't need to pay again. Just submit the application. Let me see. Let me verify. Yes, we got your application. Thank you so much. Zen. Thank you so much for that person who signed up. Okay, it sounds like we got all the questions answered. So we appreciate everyone's participation. Until next time.